Crude, Petroleum, Texas tea, black gold, bitumen, tar, Dino Juice, Earth's blood, hydrocarbons, and fossil fuels. These are all names for oil. Another interesting fact about oil is that it's used for more than just fuel. Much more. For example, oil feeds into clothing, ink, heart valves, crayons, parachutes, cell phones, electrical tape, toilet seats, credit cards, golf balls, tires, roofing shingles, and the list goes on and on. We spend a significant amount of time studying and sharing our work on oil. Our goal isn't to turn our listeners into oil futures traders. Instead, we offer a more intriguing perspective. Oil as a crystal ball. I'm Philip Petursson, Chief Investment Strategist at IG Wealth Management. Join me each week as we discuss the trends dominating the investment landscape. It's the week of January 22nd, so listen on as we navigate the living market. Energy prices offer invaluable insights into a multitude of economic indicators. They shed light on future inflation trends, global demand, and geopolitical risks. While prices broadly reflect the state of our global economy, their impact on the Canadian economy is particularly profound. By understanding oil, we gain a window into the economic forces shaping our world. Besides, who isn't curious about the future for gas prices? And lately, something more interesting has been happening with oil price dynamics. Or rather, not happening. That is, despite a number of forces that would otherwise suggest oil prices should be moving higher, the price per barrel of crude has remained rather well behaved. Is this an opportunity or risk? Let's dive in. First, consider production. Pre-COVID, in 2020, the U.S. had about 675 active oil rigs, producing 13 million barrels daily. Now, with just 500 rigs, production has actually increased to 13.3 million barrels per day, up from a midsummer low of 12 million barrels a day. Over this period, we have seen an increase in total barrels while rig numbers have gone down sharply. It shows how much technological advancements in oil extraction have improved efficiency. But can this go on for much longer? The U.S. might soon reach the limits of its production efficiency, potentially plateauing output. Alternatively, the number of rigs can certainly go up, but that has challenges on its own. Where will the labor come from in the United States with unemployment at 3.7%? Globally, oil supply and demand are in a fairly tight balance. Estimates out of the U.S. Department of Energy's Energy Information Administration put global supply and demand within 500,000 barrels per day. What if the global economy continues to show signs of improvement as we've outlined in our 2024 outlook? Employment and consumption data suggest continued oil demand in the coming year. Oil consumption figures showing larger than expected inventory draws and stable prices support this. The probabilities lead to higher demand, but will supply keep up? The potential limitations to productivity-driven supply from the United States combined with the continued production caps out of OPEC could lead to a higher price outcome for oil, not a lower price. Secondly, and perhaps more interesting, is that despite the tensions in the Middle East recently, including attacks in the Red Sea, there appears to be no crisis premium priced into oil. Oil speculators are usually quick to factor in political risks. Following the Russian invasion of Ukraine, the price of crude shot up 38% to $123 per barrel US. To measure the risk premium, we tend to follow speculative interest in oil futures. So here's the bizarre twist. The net long interest, or those that are betting that the price is going to go up, is unusually low right now, and in fact hasn't moved despite the current events. That would suggest to us that there is no war premium in oil prices, which seems odd. At the same time, we wouldn't count out it reemerging at any moment. Investor sentiment can be fickle that way. The oil market is a microcosm of the global economy. It's not just a commodity, it's a barometer for economic health. The current, and I should point out, fairly stable price of oil tells us that from the global economic perspective, things are okay. If the price of oil were a bowl of porridge, it would be not too hot, not too cold, just right. But where do we go from here? Based on the factors pointed out, we believe the more likely trend for oil prices is higher through the year, and that oil prices may be a coiled spring ready to bounce. The next few weeks should prove interesting. Oil, as the economy's crystal ball, always has a story to tell and a surprise up its sleeve. I'm Philip Petursson, and this has been The Living Market. If you've enjoyed this podcast, please take a moment to rate it or share it with colleagues and friends. It will help other like-minded individuals find us. Thanks for listening.
The content of this podcast, including facts, views, opinions, and recommendations, is not to be used or construed as investment advice and is not an offer or an invitation to buy or sell any security. The content of this podcast should not be relied upon for any purpose, and IG Wealth Management is not responsible for any reliance upon it. This podcast includes forward-looking information that reflects our current expectations or forecasts of future events. Forward-looking information is subject to risks, uncertainties, and assumptions that could cause actual results to differ materially from expressed herein. Our views are subject to change based on market conditions. Commissions, fees, and expenses may be associated with mutual fund investments. Read the prospectus before investing. Mutual funds are not guaranteed, values change frequently, and past performance may not be repeated.